Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me for this segment, we have Nick Kalivas. He's the head factor and core equity strategist, ETFs and index strategies with Invesco. We're going to take a look at some levels to watch in the Nasdaq-100 and see where the performance drivers were. Nick, it's great to see you as always. Welcome back to Trade Talks.
Oh, it's great to be here, Jill.
And it's good to have you on because we have a lot of green in the index today. Let's talk about weekly performance. How did the Qs perform since the September 21st FOMC meeting?
Yeah, so today's a nice snapback. So if you look at it, it was kind of a rough week for the QQQ, but it did outperform the S&P 500 and Russell 2000 by about 46 basis points and 204 basis points, respectively. So if you look at the drivers there, the spike in interest rates with the 10-year yield surging over 350, and the concerns over what the Fed was doing, I think created the broader market selling, which might have been exaggerated a bit by the end of the quarter. I think the market was uncomfortable with this idea of higher for longer, and the fact that the Fed was really kind of signaling it would take below trend growth. With the earnings season still a few weeks off, the market's kind of trapped in the macro. But one thing that did benefit the Qs was the fact that if you look at the stocks in the Qs, they really have low net debt to EBITDA relative to the S&P 500 and also the Russell 2000. So that was seen as a little bit of a safety valve, and I think was key to the outperformance despite the down market.
What were some of the specific drivers of the QQQ outperformance?
Yeah, so when you jump in here and look at it from a traditional attribution standpoint, it was really the exposure technology was key, and then the lack of exposure to energy and financials. Likewise, it is underweight to REITs and utilities, and interest rate sensitive sectors such as utilities and REITs really had a rough week. I mean, utilities down almost 7%. REITs down over 7.5%. So that was those were key in terms of boosting the relative performance. Now, to be fair, there was some drag from the healthcare and consumer discretionary exposures.
And you had mentioned at the top that we are in a seasonally challenging part of the year when really all stocks have to do is focus on macro and net earnings vacuum. What are you thinking about as we look forward to Q4?
Well, really, I'm very focused on the technical setup and the way the market is positioned there. I mean, one thing to look for is the fact that we are moving out of one of the more seasonally difficult periods for the market. You know, September kind of marks the end of the old adage, sell in May and go away. And there's really some extreme negative sentiment around. You know, it was the 9-day RSI for the Qs was 23 yesterday. It's hanging around this 267 level, which has been quite pivotal if you look at chart congestion from 2020 and the low we saw earlier in the year. Some of that negative sentiment is really highlighted by the indicators such as the extreme and the selling of the advanced decline line. It hasn't been this low in 20 years. The bear index from the American Association of Individual Investors actually touched 60 last week. You got to go back to the financial crisis and the Gulf War to see that. And then if you just look at things like positioning in terms of short interest in the Qs, it's getting on the high end of history. And even when you kind of sneak into the Nasdaq futures, what you see is a very high short interest percentage if you look at the smaller traders. And so from a contrary standpoint, people are poorly positioned for a rally, very, very negative. And I think what this does is set the bar very low for the earnings season coming up in the next coming weeks. And I do think that the tailwind of the high R&D spend in the Q members and that kind of the impact that has historically had in terms of earnings and revenue growth can really play out. So that's what I'm thinking about here in the next couple weeks.
Yeah, we are certainly looking forward to earnings and getting some management take there. Appreciate the insight as always, Nick. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.